The new normal also is coming to the Islamic world, because you can see the countries that constitute the Islamic world. And the growth rate of these countries has been quite volatile, but the average growth has been about 4.5%, which is very, very good. If you look at the individual countries, you'll see, of course, some of the countries that are surprisingly growing despite the problems. Countries like Libya and the other countries in North Mediterranean area are doing very, very well. The other new normal is about population growth. If you look at the growth of population in the world today, you'll see that emerging markets in 1990 represented 78% of the world's population. Now it represents 83%, and we're talking about 6.4 billion people. And if you look at the individual countries, you'll see, of course, it's China and Russia and India and those countries that have rather high populations. In the Islamic world, you're seeing very high growth in population as well. Here you can see that in 1990, Muslims as a share of the world population was about 19%. Now it's almost 25%. And if you look at the Muslim populations in various countries, you'll see that Indonesia is the largest, followed by India, Pakistan, and so forth. There's a new normal in terms of flows of funds into emerging markets. You'll see that the flows into emerging markets funds, like our own Templeton Emerging Markets Funds, has been going up at a rapid rate and is still continuing. The interesting thing is that the largest amounts are going into equity. And of course, the fixed income area is growing, but not as fast as equity. And of course, another new normal is money supply growth. Many people have been worrying about tapering, the tapering of the Fed in the US. Well, in reality, the tapering does not mean very much, because central banks around the world have an incredible increase in their capital base. You can see here, it's not only the US, but it's also China, it's also Japan, it's the European Union, and so forth. And we've seen almost a tripling of balance sheets of central banks between 2008 and 2013. So there's plenty of money around. And that's true with the sovereign wealth funds. One of the interesting things we've seen is an incredible growth in sovereign wealth funds, not only in Europe, not only in the US, but all over the emerging markets world. And you'll see the growth of these funds have been moving up at a very fast pace, and now we're looking at almost $6 trillion. The Islamic nations also are seeing a new normal of funds growth. You'll see here the sovereign wealth funds of Muslim majority countries. 42% of the total sovereign wealth funds globally are from the Islamic countries. Another new normal is about foreign exchange reserves. We've seen an incredible increase in foreign exchange reserves in emerging markets, and in fact, they have surpassed that of the developed countries since 2004. And the new normal in Islamic nations' foreign reserves growth is very, very clear. The Islamic nations have been increasing their foreign exchange reserves by a very wide margin. Why is this important? Well, if the rating agencies look at these countries, they will upgrade the ratings of those countries that have high growth and high foreign reserves. And you can see this here with the debt ratings. These are the ratings by Standard & Poor's, Moody's, and others. And you can see the green on the left are the ones that have been upgraded. The red are the ones that have been downgraded. There are more upgrades for emerging market countries compared to the developed countries. And here you can see that during this period between 2000 and 2013, emerging markets were upgraded 50% of the time, 50% of the nations, compared to only 11% for developed countries. And 20% were downgraded compared to 45% for the developed countries. Of course, in the Islamic world, we've seen the same thing. Many more upgrades for these countries, 53% upgrades versus only 22% downgrades. The new normal is also about the capital markets growth in emerging markets. If you look at where we were in 1987, when we started the very first Emerging Markets Fund, there are only 6 countries in which we could invest, shown here. Most of them were in Asia. The only exception was Mexico. Today, we are in over 60 countries around the world, including many of the new frontier markets in Asia, Africa, Latin America, and so forth. And if you look at the share of world market capitalization taken by emerging markets, you'll see that in 1987, it was 5%. Today, it is 35%. And when anybody asks me, what weighting should I have in emerging markets in my portfolio, I tell them you've got to have at least 35%, because that's the weighting in the globe. Of course, I would say, given the high growth rates, probably good to have more. And the new normal in Islamic capital markets growth is very clear as well, because here you see in 2003, it was 2% of the world market cap, and now it's gone up to 4%. It's doubled. The other new normal is about performance. If we look at performance of emerging markets since 1987, you'll see that emerging markets have outperformed the world by a very wide margin. A lot of people have worried about the recent underperformance of emerging markets, but the reality is that in the last 12 years, there have been only 2 years when there was underperformance by emerging markets. 2008 and 2011, and last year, emerging markets outperformed. This year, for the first half, emerging markets underperformed, but now you're seeing outperformance as well. This shows you the month-on-month performance, and you can see for this year, we've had the first part of the year underperformance, but now we're going into outperformance in emerging markets. And the new normal in Islamic markets performance, of course, is clear here. You can see that the MSCI World Islamic Index was underperforming for a while, but now it's beginning to outperform the emerging markets index. And again, the pattern is the same as emerging markets generally. There have been only 2 years of underperformance. And if you look at recently, again, only the first part of the year was underperformance, and now we've seen outperformance. If we look at the Indonesia Islamic Index, you'll see that Indonesia Islamic Index has outperformed the World Islamic Index by a wide margin. If we look at Turkey, again, Turkey has outperformed by a wide margin. And if we look at Malaysia, the same pattern is true. Malaysia has been outperforming. If we look at Qatar, the Islamic Index has outperformed in Qatar versus the world. But in the case of the UAE, we've seen underperformance, but that's now beginning to change. As you know, we're beginning to see a much more bullish market here in the UAE. The other new normal is about earnings growth. If you look at emerging markets earnings growth, you'll see that it's been about 14.7% versus 12% for developed countries, the historical average. And in the emerging markets of the Islamic world, you'll see that it's about 11.5% EPS growth versus 8% for the developed countries. The other new normal is about low valuations. We are seeing cheaper stocks in emerging markets, as shown here, about 10.3 times price earnings ratio versus 14.3 for the world. And of course, in the Islamic world, we're seeing a very similar situation. We're getting cheaper stocks in the Islamic world compared to the developed world. And let me say this, there's another convergence in a new normal that's taking place. Sharia idea and the ESG idea that is very, very prevalent now among more and more investors in the West means that there's going to be a lot more attention being paid to the kinds of things that Sharia investments are concerned about. The environment, social issues, and governance, corporate governance. So we're going to see a convergence globally of these ideas. And if you look at the new normal of the growth of Sharia-conscious consumers, this is an interesting survey. This survey was taken globally, and the question was, is the market for Sharia-compliant products and services significant to your organization, business today and in 3 years' time? 54% said today, and 68% in 3 years' time. So more and more corporates are looking at Sharia-compliant products. And if you look at the next question, how important is easy access to Sharia-compliant finance for your business and customers? Business, 55% said it's important. Customers said 58%. And if you look at the question, in which region where Sharia-oriented demand is a factor, do you believe growth is currently strongest for Sharia-compliant products and services? And 70% was in, of course, no surprise, Arabian Gulf region, followed by North Africa, 36%, and Southeast Asia and South Asia, 34%, and so forth. So that's the general picture of where we are. If we look at food and finance, you'll see today in the question in which Sharia-oriented industry is growth strongest today and strongest over the next 3 years. Today, food and finance. In 3 years, food and finance. Those are the areas that are going to be very important. In conclusion, let me take a long-term view. If you look at the long-term performance of emerging markets, and if we project it out, you'll see that we're looking at least a doubling of performance up to 2020. And the same thing is true of emerging markets in the Islamic world. We're looking at almost a doubling of performance as we go forward. So we're very, very excited and positive about what's happening in this Islamic world. And of course, you can see market capitalization will take a larger and larger share of the total world market capitalization by Islamic countries. Thank you very much. We have a blog and Twitter if you want to go into those for more information, and I appreciate your kind attention. Thank you.
It was a wonderful presentation, Mark. It's hard to keep up with you in two ways. One, you're a globetrotter and you travel, 200 days a year? That's hard to keep up with. Please have a seat.
Thank you.
And the other factor is that I can't compete with the way you dress.
Well, you look okay.
I try my best. Mark, I noticed you come more often to the region. I mean, if you are a gauge, a benchmark for how investment worthy this part of the world is, then you have a very positive view. Let me narrow it down. Franklin Templeton manages what, $1.1 billion in Sharia-compliant funds out of a pool of about 800 billion plus.
Yes.
Why is it still so small?
It's small because we just started. It's been only about 2 years, 2.5 years that we've started in this area. And we expect to see much faster growth going forward. We started our first Sharia-compliant funds in Malaysia. much larger.
You did start recently the Templeton Sharia Asian Growth Fund, which is sort of your first real experimentation, if you want to call it that.
That's right.
What kind of interest have you seen in this kind of fund? And is there more down the line?
Very high interest, much high interest. You must remember, we started that in Malaysia, so we've just scratched the surface. Indonesia is a huge market, and we expect more to come from Indonesia and from other parts of the world. So we're just beginning. We just put our toe in the water. We're just beginning.
Does Islamic finance suffer from a lack of effective marketing? Do you think the industry needs a new name to really harness the much argued potential?
Well, that's the reason why I mentioned in my presentation the corporate governance, social, and environmental concerns of investors all over the world, which are very compliant and in line with Sharia type thinking. So I believe there is going to be a market among non-Muslims for Sharia compliant products.
We're in Dubai, and the aspirations are to eventually become the center of the global Islamic economy. Over the last few decades, you've seen economies rise and fall, and you've made money and you've lost money as well. Are these goals achievable?
Definitely. I mean, if you look at the growth here in Dubai alone, not to say in other countries in the region, the potential is incredible. Because you must remember, you have millions and millions of people who speak the same language. And the ability to communicate is very convenient, very easy. So I think that the opportunity is quite remarkable.
I mean, the potential is clearly there, and I think from previous conversations as well, more needs to be done in terms of regional cohesion. So yes, they share the same language, and they also to a large extent share the same religion. But when it comes to financial integration, when it comes to markets, when it comes to depth, there's still a lot of work to do, isn't there?
Tremendous amount of work. And you find that everywhere in the world. There's competition between different stock markets for more IPOs and more trading and so forth and so on. But I see the necessity for more integration, and these institutions, the stock markets, the regulators are going to be getting together more and more because they realize it's a global economy. It's no longer a single market economy.
How has it been for you navigating this part of the world, and perhaps with particular focus on Islamic finance? Has it been, I mean, which country has been the most welcoming? Where has it been the easiest to do business?
Well, here, UAE is
That's a biased answer, Mark.
No, it is true. UAE is the easiest to do business. It's quite remarkable. As you know, we have an office here. We've been expanding here in a big way, and it's a wonderful center for all of the region. So I would say this is one of the easiest. But I must also say that in all of these countries, these Islamic countries, there is a friendliness towards equity, towards stock markets. And that is very gratifying for us because everywhere we go, we can find a stock market.
So again, if we take a view on the entire Muslim world or Islamic world, which country stands out or in terms of becoming a breakout nation and building on the fundamentals that we discussed as well in our morning panel in terms of recalibrating the economy towards, providing the supportive pillars for growth to take off?
Well, obviously you have to go to the big countries, the Indonesians of this world, Saudi Arabia. These are the big markets that have the potential to become bigger than they are now, and particularly more dynamic, more listings and so forth. But there are a lot of restrictions that have to be overcome. And the restrictions in Saudi Arabia is one problem that we have to overcome.
What's been the role of instability? I mean, you have Iraq, you have Syria, Egypt to a certain extent is still a very tumultuous country, Libya, and many others. It almost seems like the Middle East sets the benchmark for political volatility. How has that affected your investment strategy and your approach to Islamic finance opportunities, for that matter?
We love instability because it means volatility. And the ability to buy cheaper stocks in a volatile time is good.
Yeah.
Now, I'm not saying if you remember the saying, the best time to buy when blood is on the streets, that's not what we do. I mean, we don't like that idea of having violence and war and so forth and so on, but the volatility and the instability doesn't bother us as long as we see the long-term development of the market. So you take, for example, Egypt. There is a fundamental ethic in the society, which means that they will not go too far in creating a chaotic situation. So we have faith over the long term to be invested in Egypt, and that's true of many of the other countries.
Yeah, I'd like to go back as well to some of the points that were made earlier, in that you not only have centers in the Islamic world competing for hub status, so Dubai is best example since we're here right now. You also have countries outside that region that are competing for that status, and the United Kingdom is making its case, and the city in particular, towards embracing more of that kind of investment. Of the different competitors, who is really well positioned to tap that potential?
London doesn't have a chance.
Okay.
And the reason is about tax and ease of doing business. You must remember the tax situation here in the UAE is very favorable for investors, equity investors. So,
well, not just equity investors.
yeah, all investors, but I think that the opportunity here is much, much greater going forward. Because one of the things that you're seeing in the West, in London, in the US, in European Union, is an increase in regulation, and an increase in regulation which is inhibiting the free market. And that's very, very bad for markets. If you don't have really a free market, I'm not saying that you tolerate embezzlement and fraud, but at the same time, you've got to allow the market to move and for investors to make their own decisions. So the increasing amount of time that we spend, for example, on compliance, to comply with things like Sarbanes-Oxley and so forth, is becoming very expensive. And this is where a place like the Middle East, a place like UAE, has a great opportunity.
You've been very positive on emerging markets and frontier markets. I mean, it is your playground, if you want to call it that.
Right, that's for sure.
You've been keen on Asia, and I know you're very excited about Africa, and that leaves me to ask the question, where does the Middle East fit in the global scheme of things? I mean, in terms of scope and size, it's still quite small, isn't it?
Actually, we now have about $4 billion in frontier market funds under management.
Which would include Africa as well.
It includes Africa, it includes the Middle East, it includes countries in Asia like Vietnam, Pakistan. It includes East Europe like Romania, Bulgaria, and so forth. But if you look at the largest holdings in that fund, in our frontier funds, the Middle East and Africa are right at the top. In fact, the two largest countries are Saudi Arabia and Nigeria.
All right,
so
perhaps
Middle East is very important for us.
Some investment tips then for those who have some extra cash to spare. Top 3 in the Middle East and North Africa, countries to put your money to work.
In the Middle East, I would say, of course, UAE, Qatar, and Saudi Arabia.
In that order?
In that order, yeah.
Okay.
Because UAE, of course, it's both Dubai and Abu Dhabi. And, well, I do have to reverse the order because Saudi Arabia is a much bigger market. So it'd be Saudi Arabia, UAE, and Qatar.
And which one would you stay away from? With the sort of quote, stay far, far away from that market. There has to be one. I know you're always looking at the glass half full, but there has to be a market you're avoiding completely.
The only market we're avoiding is because we can't get in, and that's Iran. But that could change very quickly. So we are excited if things get better in the peace talks with Iran. That could be a very, very exciting market. But right now, obviously, we have to avoid it.
We'll see how it plays out. We'll have to leave it there. Thank you very much, Mark Mobius, Executive Chairman, Templeton Emerging Markets Group. Thanks again.
Thank you.